In today's video, I'm going to explain to you exactly how to trade Bitcoin from top to bottom, starting out with buying your first Bitcoin or amount of Bitcoin, because remember, you don't have to buy a full Bitcoin, you can buy a fraction of one, then moving on to how to deposit Bitcoin, how to make an account, stuff like that, and then moving over to some trading techniques. This video is timestamped in the description, so you can skip exactly to the point of the video that you want to watch. And towards the latter end of today's video, I will be explaining some trading techniques that I have used over the past 6 years to make a very good income with. Because if you don't know anything about me, I am TMG. I trade for a living as well as doing YouTube. And before the age of 25, I managed to purchase myself a Lamborghini in cash with no finance, which I think is, well, it's quite a big personal achievement for myself. And that's not me trying to brag, it's just saying I took a lot of risks and some of them paid off, and I'm very thankful for that opportunity. And so I figure it'd be quite good to share some of my knowledge that I've gained over the past 6-7 years with you guys, and hopefully you can go on to make a career out of it.
Few boys in the VIP were just floating. Hit the club, past the mic, let's go. Sick eyes on me when I roll in. Pull up in a whip, it's stolen, yo.
If you're in the USA or you're using a computer, you'll probably find it easier to use Coinbase to purchase Bitcoin with. However, I've left links to both Coinbase and Swissborg in the description. If you're not in the USA, if you're in Europe or using a mobile phone, then you'll probably find it easier to use Swissborg to purchase Bitcoin with. It's got much cheaper fees, and if you're holding a certain amount of Swissborg tokens, then you can actually trade on their zero fee. You get the market rate exactly as it says on Google, if not better because of the way that Swissborg works. Now, once you've gone through their verification procedures and you've purchased yourself your first amount of Bitcoin, if you look in the description, there is a link to Bybit, and this is where I do the majority of my Bitcoin trading. Bybit is a derivatives Bitcoin platform. Derivative platforms allow you to basically trade the value of an asset rather than trading the actual asset, allowing you to make money off the price movements of that asset. Now you're on Bybit's website. Simply to sign up, type in your email and password, click go on that, then do the email verification procedure by logging into your email, of course, checking out the email that they send you, type in that code, and then Bob's your uncle, you're on your way. And now the next job is to fund your account. This is quite simple. If you go on Swissborg's application, once you've purchased your Bitcoin, simply click on the Bitcoin wallet and then click send. At that point, you'll get the option to either scan a QR code or type in the Bitcoin address. Now, the easiest way to do this is to go onto Bybit's assets page, then click on deposit. At that point, scan it with the mobile application, and then all you have to do from there is type in the amount of Bitcoin that you want to send, press send, and at that point your Bitcoin will be transferred over. Now, it may take an hour or two depending on how congested the network is, considering Bitcoin transactions are limited to 7 transactions per second, so there is always quite a backlog on the network. And next up, I'm going to explain to you what each individual feature on Bybit Exchange means, such as what's a limit order, what's a market order, what's a conditional order, what does leverage mean, how does it all operate, all that good information. I'm going to explain it to you right now before moving over to exactly how to trade Bitcoin, how to analyze Bitcoin's price, and how to work out in which direction Bitcoin's price is going to go, because ultimately that's the end game for everything here. So here we find ourselves on Bitcoin's main page, and you can see here I've got an available balance of 3.79 Bitcoin. So the first thing I'm going to explain to you today is how to place a limit order on Bybit. First thing that you've got to understand is if you type in a price that is above the current market price, then as soon as you press go, then the order will trigger. This is not the way to place a limit order. You're essentially placing a market order by buying up the order book. If you want him to place an order that triggers at $9,800 for a long, but the price isn't at $9,800 yet, it's below that, then you need to be looking at conditional orders, of which I'll go on to explain in just a moment. For placing a limit order, if I was wanting to go long, what I'd be looking for here is to fill up a place on the order book here. So say I wanted to place an order at, say, $9,700, and I wanted to place a $5,000 order there, and this order price is only going to cost me 0.0095. Now let me explain what's going on here, because although it says 5,000 here, it's not going to cost me $5,000, and that's because I'm using 10x leverage. Now what you're doing with 10x leverage is you're taking your initial starting capital, timesing it by 10, you're essentially borrowing 10 times your money, but it means that you're going to get liquidated or make money 10 times as quickly. So for every 1% Bitcoin's price moves, it moves your position profit and loss by 10%. So if I click on buy here, it gives me an option to take profit and set a stop loss, of which I would always recommend you do. In this case, I'm going to say 25% take profit, 25% stop loss, and the order price will trigger at 9,700. At that point, you would then press confirm, at which point that order then goes into your active orders section. Now you may notice mine says active 0. It's not because Bybit's playing up, it's because Chrome on my computer is having a bit of a dicky fit at the moment. I don't understand why. It's being very frustrating today. But anyway, you can see here my take profit is at 10,000 9,200. My stop loss is at 9,400. It's a $5,000 trade, triggering at $9,700. Now, I don't actually want this trade to take place, so I'll press cancel, and we'll move on to the next type of trade that you can do, which is a market trade, which basically says if I want to bet that the price of Bitcoin is going to go up, I'm going to say that I'm going to put $5,000, 10x. It's only cost me $500 to open up this trade, and I'm going to press buy long. So if I think the price of Bitcoin is going to go up, I'll press buy long, set my take profit at 25%, I set my stop loss at 25%, and it's that simple. That's it. That trade is now open. You'll see here that it's currently in an unrealized profit of 0% because the price of Bitcoin hasn't moved since I've opened it. So now that trade's open. Say I wanted to buy insurance for it, I can click here, and you'll see that mutual insurance is designed and managed by Bybit. Basically, this is an insurance fund that covers your position getting liquidated. So if I press confirm on that, it brings up this page here that says mutual insurance, and it says max payoff here, insured price, auto liquidation claim price. So then I've got the option here, if I'm going completely degenerate with my trading technique, if I think that I'm going to get liquidated in the next 48 hours, I've got the option to purchase this insurance that ultimately costs me less. It costs me about 20% of what it costs to open up the position. However, it means that I don't lose the full position here. So I could open up a huge position and then put insurance on it that would cost me 20% of what the position costs. However, I wouldn't lose that initial starting capital. And if I made more than what the insurance cost, which is generally always the case, I would make more money than what the insurance costs, so therefore I would profit overall. So I would never not recommend taking out insurance, especially if you're new to trading. It's quite a good way of making sure that you don't lose your ass straight away. However, just remember that this insurance only lasts for a set period of time. However, on this occasion, not buying the insurance, don't need to waste any more money on this. This is just a tutorial video. And this point here, I'm going, well, Bitcoin's price hasn't moved since I've opened the position. I want to close this position now because I want to move on to the next part of this tutorial. So at that point, I'm going to press market close, the whole order, and that's it. Order submitted, done. I'm out of that position. It's that simple. Moving over to conditional orders. Now this is where it gets quite interesting. We've got limit and we've got market. Now the easiest way of doing a conditional order is that, say I want to long Bitcoin's price at $9,800. However, if I use a limit order, then that will mean that my order buys into the order book here. Now this is the order book. If you don't know what an order book is, it's all of the orders that are on the platform, all combined in a way that you can see them all, so you can see exactly how much buy and sell pressure that there are. Now currently you can see that there's substantially more buy pressure than there is sell pressure, so probably the price is going to start rising over the next minute or so, but this changes consistently all the time, and it's not a very good and accurate way of working out exactly how much the Bitcoin price is going to move. What we have underneath the order book, you'll see, are the recent trades that have taken place, because although this flashes around all the time, a lot of it is to do with market making on the platform. Market makers buy and sell off each other all the time. However, real traders, you'll see that their trades go down here, and you'll see that there's a trade almost every second of the day, because Bybit is a very, very liquid and very active platform. Anyway, moving back over to the conditional orders, I'm going to set market here. I'm going to set my order to trigger at $9,800. It's going to be a $5,000 order again. We're going to press buy long, and you'll see that this order won't trigger, but you will see that it'll go into my conditional order section. So basically, this order is now active, and as soon as Bitcoin's price hits $9,800, my order will be slotted into the order book at $9,800, and it will probably get sold into, meaning that I will be able to then have an open position for $5,000 long on Bitcoin's price starting at $9,800. Now I find this particularly useful when trading Bitcoin. For example, if we were to break below this very badly plotted line here, and I'm going to explain more about charting in just a moment, but if we were to break to the downside of this line at say $9,400, somewhere around them parts, I would like my order to trigger at $9,400, but if it's going to happen during the middle of the night, I might want to set a conditional order so that the order would trigger, and as Bitcoin's price collapsed over the evening, I wouldn't have to be at my desk watching it, because I know that the second that Bitcoin breaks through this level of support, it's probably going to go back down to around $8,100, but more on that explanation in just a moment. By the way, if you've got any further questions on this, leave them in the comment section below and I'll do my best to answer every single one of them. So now we've covered how to buy Bitcoin, how to send Bitcoin to a different platform. It's the same method for sending Bitcoin peer-to-peer or sending Bitcoin anywhere for that matter. It's really not a complex feat. Literally just copy and paste the Bitcoin address or the QR code. We've also covered limit orders, market orders, and conditional orders. We've covered how to use the insurance fund, and the next thing I'm going to do is move over to the USD perpetual swaps platform, which is Bybit, but essentially the same thing, but you're using dollars in order to trade with, or dollar equivalents to trade with. You trade the exact same way on this side of the platform. However, make sure that you're not using cross, because nobody watching this video should probably be using cross. It'll just land you in a bunch of trouble. Click on isolated up here and use your leverage amount to choose basically how much leverage you want to use when trading. Click confirm. Obviously, I'm using an insane amount of leverage there. You should never really be using above 10x leverage. There's no need for that other than greed. So now what I'm going to do for the sake of this tutorial video is show you how to either make money or lose money on Bybit, which I'm going to say I'm going to sell short 10x $5,000. No take profit, no stop loss. Just click confirm. You'll see that the position opens here, and you see that so far in today's video I've paid $19 in fees just showing you this. Now I'm going to check back in on this order towards the end of today's video, and I'm going to say I want to take profit at $9,730, and we'll see if it triggers before the end of today's video. Click all, click confirm, and that's it. As soon as this hits $9,730, this will close in profit, and I'll probably make about $20 or $30, which will pay for the fees for making this video. And now it's time to move over to some trading techniques. How do you chart Bitcoin? How do I make money learning where Bitcoin's price is going to go? And there are so many factors to take into play here that I'm going to try and condense as many as possible into as short a time period as possible. We've got two main indicators that I use to start with, the RSI and the MACD. Now you shouldn't really be concerned if the RSI is oversold or overbought. In the case of it being overbought, that would mean that the RSI line is trading outside of the two dotted lines, and the same goes with it being oversold. It would mean that it's trading to the downside, meaning that too much has been sold, but we don't need to pay too much attention to that. So what we're particularly using the RSI for is divergences. Now you may notice in some of my more recent videos I've been quite bearish, and that's because looking at this here, we have a very strong bearish divergence on the 4-hour RSI chart. Now you may be asking, well, what does bullish and what does bearish mean? Bullish means I think the price will go up. Bearish means I think the price will go down. It's very famous terms. You should definitely get on Google to learn them. Now, because I think Bitcoin's price is going to go down, I will know if this divergence is broken if the RSI continues to trade above this line in just a few hours time. Now, it will take a few more candles for this to figure itself out, but as you can see, Bitcoin's price movement here is positive, whereas his RSI movement is negative. You can see the same divergence here on the MACD. However, you use the MACD in a different way. So let me enlarge that and show you exactly what's going on here. What we have here on the MACD is two moving averages. Now, MACD means moving average convergence divergence. So what we have here on the MACD is we've got 12 candles added together and then divided to work out an overall figure to give this line, and then you've also got the same thing for 26 candles added together and divided. Now you'll see here that this volatility seems to be slowly decreasing. However, Bitcoin is ultimately quite bearish on the 4-hour chart, because you can see here that the blue line is quite simply below the red line, and that is what we're looking for here. When the blue line goes above the red line, you'll see that Bitcoin's price rises. So you can see here that we crossed over to being bullish here, and you see that this is reflected in Bitcoin's price here. However, when Bitcoin's price started to dip a little bit, you'll see that we had a bearish cross on the MACD, and the same thing is reflected in Bitcoin's price as it continued to decline. And the MACD is a very historic momentum indicator. Now, a momentum indicator doesn't tell you exactly when something is going to occur, but it tells you once it's occurred, it's probably going to continue for a sustained period of time. For example, here, where we had the bullish cross, and then Bitcoin went bullish and it shot upwards, is quite a good one to use, especially for trading on short, medium, and long-term time frames. So if we apply this theory to a different time frame, like the daily chart here, you can see that Bitcoin is actually bearish on the daily chart, having had this huge momentum going upwards here. You'll see that Bitcoin had a bullish cross at the bottom of this dump here, and its price continued to rise up ever since. We had a retest here where Bitcoin didn't look too happy. However, since then, it's continued on trading bullish. However, currently, Bitcoin is bearish on the daily MACD. The histogram is also bearish, indicating that Bitcoin's price is going in for a decline. Hence why I opened a short position in this video as an example, because I think that of all the positions it could possibly pay off at the moment, a short position is probably going to be slightly more likely. So then when applying this to smaller time frames, because a lot of you guys watching this video will be wanting to scalp, I think it's important to point out that you should not take a trade if there isn't a trade to be taken. It's much better to set a conditional order in expectation of a dump that might happen overnight than it is just to take a random punt during the day. And I know from personal experience that the temptation is there when you've got maybe $10,000 in an account. You're like, I just want to trade. But no, that's the fastest way to lose money. Be very responsible when you're trading. And if you can exhibit self-control, then you're 100 times more likely to make money, because if you can't control your own trading techniques, then you will probably lose all your money. Discipline is so important when trading. So looking at what we have here on the 15-minute chart, you'll see that we've got this bullish divergence. However, we can't really take any clear measurement from this because we've got an equally bearish divergence coming from the top, meaning that this means nothing to us and we shouldn't be using this to be trading with at the moment. However, the MACD always gives you an answer to your questions, and that is that Bitcoin is currently trading bearish. Now, I always use very basic indicators for the reason that most of Bitcoin's price is moved by bots, and bots use basic algorithms and basic trading indicators in order to work out where the hell Bitcoin's price is going. I also poll my audience on a regular basis in order to work out whether they're bearish or bullish. Generally, the sheep get wrecked, so whichever side is more popular is probably going to be the one that loses the most money. Case in point, 2 days before I made this video, I conducted this poll where the majority of the answers were bullish, further confirming my theory that Bitcoin had ticked bearish, at which point, while editing this video, Bitcoin had a colossal dump this morning, further proving that analysis does in fact work. But in order to get an accurate reading for exactly what's going on with Bitcoin's time frame, it's important to look at every single time frame. In my opinion, a lot of people trade different to me, but this is just the way that I've had a lot of success trading Bitcoin. You see that the moving average here on the moving average convergence divergence is just bullish, indicated by the histogram. When it gets really close, it's quite good to have a histogram on your MACD, just quite simply to say which side we're on at the moment. So the hourly chart is bullish, and the RSI, again, we can't really be taking any measurements from that because it's not particularly accurate at the moment, because it's not indicating any strong divergences. On the 4-hour time frame, you can see that Bitcoin is bearish. You can imagine a bit of a curve to the upside. However, you should not be imagining a bit of a curve to the upside. You've got to take these indicators for what they are. Moving over to the daily chart, you'll see that Bitcoin is currently still bearish on the daily chart. Now, it could have a retest to the downside. I'm thinking that seems like the most likely scenario here. I understand there's a lot of bullish people in the markets at the moment, but me personally, I'm not bullish. However, this is not a Bitcoin analysis video. This is a Bitcoin teaching video. Now, you'll see that we've got quite a clear bullish momentum on the MACD on the weekly chart here. You see the histogram is bullish. We've ticked bullish with the blue line crossing over the orange line, and we've got a clear bullish momentum within the RSI. However, no particularly clear bullish divergences, because remember, a divergence is basically the price going opposite to what the RSI is going. So if the price is going down and the RSI is going up, then that would mean that you would expect a price increase in that asset in a short period of time. Moving over to other external indicators that are really good to use to work out where Bitcoin's price is heading. The first is institutional volume, and for that we can see on CME Group's website exactly what's going on by clicking this chart button here, and you'll see that institutional volume over the past few weeks has been absolutely, well, just killing it, to be honest. It's up 10 times in the month of April, and it'll be up even further in the month of May. Now, when institutional volume is increasing, that probably means that institutions are buying Bitcoin, because historically institutions are new to the world of Bitcoin, but it is quite evident that institutions prefer to buy paper Bitcoin, which is trading derivatives, than it is buying the underlying asset. They'd much rather trade derivatives with fiat currency than they would actually buy Bitcoin, which isn't necessarily the most confidence-inspiring thing. So now we're going to look at trading formations and different trading formations that have occurred on Bitcoin's price over periods of time. And again, this is applicable to any asset. It doesn't have to be Bitcoin. It can be any asset. So what we've got here, this is known as a bull pennant. Bull pennants typically break to the upside. However, we've not really filled this one out that far so far, and it could drag us all the way into 2021. I mean, I dread that. I mean, I'd much rather $20,000 Bitcoin this year than next year, but I'm not complaining if that does happen. Now, a bull pennant is fairly obvious as far as formations go. There are less obvious formations. So let me explain them to you. Starting off with the bump and run formation. This is where a price of an asset starts to rise, then it starts to rise a bit more steeply, and then you get your run off. The same thing happened with Bitcoin in 2017, where Bitcoin's price was moving all the way from 2015 onwards, started increasing, and then it started to increase at a really rapid pace before dropping off massively and dumping all the way back down to $3,000. Now, another example of a trading formation that takes place on a very regular basis would be the head and shoulders formation. What you've got here is you've got shoulder, head, and then shoulder, and then eventual break downwards. However, in this case, it didn't play out. Now, the head and shoulders formation has got about a 70% success rate. Historically, it's been a very accurate one for me to trade. However, it's important to understand that this theory is cancelled out when Bitcoin comes up and retests what's known as the neckline. Now, the neckline on a head and shoulders formation is the point where the shoulders are, essentially. If you imagine head and shoulders, it's straight across the neck, chop off the head, and that's where your neckline is. If you come back up, you break above your neckline, then cancel those orders, wait for Bitcoin's price to recover. As you can see here, we continue to break above the neckline, having had this eventual breakdown after the head and shoulders had taken place. Possibly the best way to be trading Bitcoin has always historically been just using simple support and resistance levels. Now, to explain what a support and resistance level is, these are fictional levels, so to speak, where if Bitcoin crosses over them, you can expect a fairly large dump. Now, to give you a visual explanation of that actually happening, what we've got here is we've got a support turn resistance level, and this resistance level, when we broke back above it, Bitcoin's price shot up massively. Now, this happens on a regular basis, especially when you look at the historically longer term time frames. You'll see that Bitcoin, once it had shot above it, we got a confirmation. A confirmation is where you come down, you retest a previous support level before bouncing off it and going back upwards, and we got that confirmation here, and then we shot back upwards again. And support and resistance trading in the past has been a really successful technique for myself. You see that Bitcoin is currently sat on the edge of this resistance level here, and if we manage to break above it, we'll come up, we'll test this resistance around $10,100, and a break above $10,100 will probably mean that Bitcoin goes back up and retests its previous highs around $20,000. Now, looking at this, I need to zoom out a little bit, but around $20,000 around here. However, there is one more likely scenario, and that could be that Bitcoin goes as high as between $12,000 and $13,000 in this case. It comes up, it fakes out. A fake out is basically where you don't technically have the real bullish momentum behind the price, and it's completely manipulated out of where it should be. The reason that people do that is to get new retail traders very bullish about Bitcoin's price before dumping on them and making even more money. You've got to be really careful about fake outs, which is why you should always set a stop loss when trading. Speaking of positions, this position that I opened earlier in the video has still, well, it's not made any money yet. I'm still waiting for Bitcoin's price to move. It's fairly obvious, I think, that Bitcoin's price is going to go down at the moment. However, for the sake of this video, I'm going to cancel this. You'll see that that cancels the stop losses, and from there, we can press cancel again, and that'll sell my entire position, and that's it. I'm out of the position. I'm done for the day. I don't need to continue trading. That's it. I can then look for a new position. So I really do hope this has added to your trading. If it has, please do smash like on it. Share this video with a friend that's trying to learn trading. I thought I'd share some of my thoughts on this. I can make future tutorials explaining things more in depth. Just comment what you'd like me to make videos about in the comment section below, because I understand that some of this information might be really useful to you guys that are trying to get to grips with the world of trading. I really do appreciate you spending your time watching this video. Make sure you have subscribed to the channel. I post trading videos every single day. They're well worth watching. I express my thoughts on the market, and historically, I'm very, very accurate. So have a great day, guys. I love you. I appreciate you. Make sure you are subscribed to the channel. Share the video with a friend, and deuces.
This video is over now. You'll find something else to watch, or just watch this video. I know we had a lot of fun, but you can't stay on this end screen forever.